So in this week's AMT Insight, I want to talk a little bit about the recent volatility in the copper market. Now, it's been a really interesting few weeks for copper prices and for base metal prices more generally. Base metal price gains have really accelerated since the back end of April and early part of May, and copper has really used that momentum to push through the all-time high of $10,190 a tonne that was set in 2011. So it's a key milestone, and we're now at record levels for copper. Inflation concerns have crept in over the last week, led by strong consumer price inflation in the US. And that's really led to concern and fears that monetary authorities like the Federal Reserve might be forced to accelerate the pace of monetary policy tightening. Equity valuations kind of sold off quite a lot. Base metal prices also pulled back, probably not too unexpected considering the strong pace of gains we saw over the last few weeks. Probably due a bit of a correction anyway, to be honest. Copper generally held up quite well. It did come off a little bit off highs, but it's generally holding up quite well above $10,000 a tonne. In terms of what was driving that more general continuation of the base metals rally, it's really been this recovery in ex-China economies as they recover from the pandemic. In terms of manufacturing PMIs, goods demand, for example, we see the US, the Eurozone, and the UK all seeing basically at or near record levels of April manufacturing PMI growth. And we've seen really that a lot of the dependence was on China for fueling a lot of that demand growth into 2020. China demand growth has moderated, and the focus is now shifting to that ex-China recovery. In terms of how that's been reflected in the commodity space and copper in particular, we've seen strong, fresh flows of fund interest and increased bullish sentiment, renewed bullish sentiment in commodities after the long liquidation that we saw around March and the consolidation we saw in March. So we've seen algorithmic CTA fund flows, option short covering also helping push the price up, and speculative long positioning on COMEX and also LME is at pretty strong levels right now. Probably moderated in the last week because of those inflation concerns, but we won't pick that up in the data till next week. In terms of copper as more specific fundamental narrative, that's really been the key driver of how you differentiate its price gains compared to its the relative underperformance of the rest of the base metals complex. And that's both since the start of the pandemic and since the beginning of 2021. The exception to that being tin, which has also performed pretty strongly. The real driver for copper is the long-term outlook for demand. US, Europe, China, all really committed to this green energy transition, net zero carbon goals and climate commitments, basically. And that's going to lead to strong demand for copper in electric vehicles, in power grid infrastructure, in renewables. So all those areas which governments are going to have to invest in to achieve these climate goals. A key area of concern, however, as we've seen copper prices coming up, has been consumer unwillingness in China to pay these higher prices. So Chinese physical demand has been quite weak, really, in the last few months, particularly post-Chinese New Year. I think that's reflected in a few indicators. So the cathode premium, the physical premium for imported copper cathode is at almost decade lows, I think, at the moment, as you can see on the chart. Also, SHFE copper inventories, which you would expect to have drawn down quite significantly now after the seasonal peak at Chinese New Year, have continued to rise. Also, more generally, there is this crackdown or this rhetoric amongst the Chinese authorities that they're worried about high producer price inflation related to this big surge in commodity prices. And they've been moving to crack down on that, both in terms of trying to stop brokers, for example, putting out bullish commentary, but there's also other tools like monetary tightening that remain available to it, which could also be something that needs to be followed from a price outlook perspective. However, in the long term and overall, it's hard not to still be positive about copper prices, right? You look at the trend since the beginning of last year, it's been a completely consistent bull market, and we're still in a bull market. You'd be very brave to call the top now. If you look at financial institution forecast, you've got Citi saying $12,200 copper by September, Goldman $14,000 by 2024, Bank of America $13,000, but I've said up to $20,000 possible, although that's reliant on not much scrap supply coming to the market, and I think that's probably quite likely to happen. over the coming years, because as prices pick up. And Glencore also saying that to get this mine supply, you're going to need to meet this big surge in demand. You're going to need a 50% increase in prices from current levels. That would be about $15,000 per ton. So overall, we're still in a bull market. I mean, obviously there are these risks in terms of in the short term, in the months and kind of years, from these macro events like potential policy tightening or big shifts in policy tightening expectations. And we are likely to see these kind of waves in commodity prices, particularly copper, over this period. But still, I think the overall trend for copper is upward, and the overall trend trajectory for copper is upwards. And at the moment, that seems to be the direction. Thank you very much for listening again to this week's Insight. If you haven't already done so, I'd encourage you to follow us on LinkedIn to get more notifications of these insights, and also check us out on the AMT website.